Hey there, welcome to your personalized deep dive. Ready to decode this wild world of Bitcoin. You sent over uh some really thought-provoking research, especially this article.
hmm
It connects Bitcoin's future to, wait for it, China's economic policy.
Yeah, and what a timely connection it is.
Right.
With Bitcoin's price swings and all the buzz around it, I mean, you're definitely onto something here, wanting to dig deeper than just, the headlines.
Absolutely. Okay, so this article, it basically throws out this idea that global economics, especially China's moves, are about to seriously rock Bitcoin's boat.
hmm
It even uses this phrase, cocktail of bullishness, which honestly made me picture, like, a Bitcoin wearing a little bull costume.
It's a vivid image.
Yeah.
But I see why the article uses that phrase.
Yeah.
It's trying to capture, I think, how several factors are aligning in a way that could be very positive for Bitcoin.
Right, and you sent over some other pieces about China's economic policy in general, so it's interesting to connect those dots here. Like,
Yeah.
what are the main ingredients in this bullish cocktail the article's talking about?
Well, two big ones stand out.
Okay.
First, we've got this thing called global monetary easing,
Oh, boy.
which sounds way more complicated than it is.
Yeah.
Essentially, it means central banks around the world, including our own Federal Reserve here in the U.S., are cutting interest rates and pumping money into their economies,
Okay.
just to encourage spending and growth.
Okay, so more money flowing
Yeah.
around. Got it. And the second ingredient?
China, they're going big, injecting 500 billion yuan.
Wow.
That's over 68 billion US dollars
Wow.
into their economy.
68 billion, that's a lot of zeros. But I'm guessing it's not as simple as China boosts its economy, Bitcoin automatically goes up.
Right.
You're right to be skeptical of easy answers.
Okay.
Here's where the article gets interesting. It argues that these policies, while intended to boost economies, can also have the side effect of weakening traditional currencies.
Okay. I'm following so far. More money printed usually means each individual dollar or yuan or euro, becomes worth a tiny bit less over time.
Exactly.
All right.
It's like anything else. The more common something is, the less inherently valuable it becomes. And that is where Bitcoin comes in, according to the article.
You see, unlike those government-issued currencies, Bitcoin has a fixed supply. No one can just decide to create more.
Which the people would say makes it a more reliable store of value, especially in times of, economic uncertainty.
Precisely. When traditional currencies wobble, Bitcoin starts to look like a safe haven, like that metaphorical gold buried in the backyard.
Right.
Except, digital.
So we've got this potential safe haven aspect of Bitcoin, but then the article dives into something that really caught my eye: Bitcoin's price history.
Mm-hmm.
And guess what? It claims things are looking really similar to some of Bitcoin's past booms.
A little Bitcoin deja vu.
Right, and it gets even more specific. The article highlights Q4, the last quarter of the year, as historically being like big for Bitcoin. Like, buckle up. Big moves are coming kind of big.
Yeah.
I love a good pattern, but should we really be stocking up on, like, digital party hats just yet?
Well, let's not get ahead of ourselves.
Yeah.
While historical trends can be informative, they're not exactly crystal balls, unfortunately. It's essential to understand the concepts of market cycles, which the article touches upon, to really grasp why this Q4 prediction is generating so much buzz.
Okay, so Market Cycles 101. Break it down for me.
Okay. So in the simplest terms, markets, especially volatile ones like crypto, tend to move through periods of, boom and bust.
Okay.
Kind of like a roller coaster with its ups and downs.
Right.
Bitcoin, for all its revolutionary potential, is not immune to this.
So are these cycles, like, predictable? Is there some secret formula to knowing when to buy and sell?
No secret formula, unfortunately.
Yarn.
But by studying past cycles, analysts try to identify patterns.
Okay.
A typical cycle might start with a period of accumulation where prices are relatively low and savvy investors are, quietly buying in, believing in the asset's long-term potential. Then comes the bull run. FOMO sets in, everybody wants a piece of the pie, prices skyrocket.
The fear of missing out.
Yes.
A powerful force, but what comes after the peak?
Inevitably, what goes up must come down.
Right.
A correction happens, maybe a small dip, maybe a larger one, as some investors decide to, cash out their profits.
Okay.
This can trigger what's called panic selling,
Uh-oh.
leading to a bear market where prices drop significantly, and then the cycle begins anew.
Okay, market cycles, got it. But Bitcoin isn't the only player in this game, is it? The article also mentioned these meme coins, and Honestly, this is where I kind of like got off the train. One was even called Brett.
I'll admit, even seasoned analysts like myself raised an eyebrow at that one.
Yeah.
But you've hit on an important point. These meme coins, as fleeting and maybe even absurd as they seem,
Right.
they reveal a lot about the current landscape.
Okay.
They highlight the massive influx of new investors entering the crypto space, many driven by, shall we say, enthusiasm
Yeah.
rather than, in-depth market analysis.
So it's like that fear of missing out, but on steroids?
Precisely. It's FOMO on a whole new level, and it creates this incredibly volatile environment, capable of huge swings in both directions. Which brings us to another point the article made. Even with all this meme coin madness, there are signs that the traditional financial world is starting to take crypto seriously.
Yeah, it mentions Societe Generale, SG, getting involved, creating their own stablecoin, right? I have to admit, I wasn't totally clear on what a stablecoin even is.
Great question. A stable coin is a type of cryptocurrency designed to minimize price volatility.
Okay.
They're usually pegged or tied to a more stable asset like the US dollar or gold.
Okay.
So, for example, 1 unit of a stable coin might always be worth $1,
Right.
making it less prone to those, wild fluctuations.
Okay, that makes sense. So SG creating their own stablecoin, is that a big deal?
It's a huge deal. When a giant like SG, a cornerstone of traditional finance, steps into the crypto ring, it sends a powerful signal.
Wow.
It suggests they see long-term potential in this technology. And that paves the way for wider adoption, for crypto becoming more mainstream, more integrated into our everyday financial lives.
So we've got global economic forces potentially boosting Bitcoin, historical patterns suggesting something big might be on the horizon, and now even major financial institutions are getting involved. It's a lot to process.
It is, and it all circles back to, I think, a fundamental question this deep dive raises. If Bitcoin's value proposition is, in part, based on it being a hedge against weaknesses in our traditional financial systems, what does that say about the future of those systems? Something to ponder, wouldn't you say?
Definitely something to ponder. Thanks for walking me through this. It's been enlightening, to say the least. And to you, dear listener, thanks for joining us for this deep dive. We'll catch you next time for another fascinating exploration. Until then, keep those curiosity engines running.